Crypto just got a regulatory shakeup. The SEC has cleared a path for faster ETF approvals. Ethereum is facing mounting pressure as unstaking requests surge to record highs. And with the next bull run on the horizon, two coins under 10 cents are catching attention for their potential upside. Welcome to the Daily Blockhead, where I cover daily crypto news, trending coins, market shifts, and the global events shaping today's crypto. Now, let's jump right into it. First up, the SEC has cleared a path for faster ETF approvals. Big news out of Washington. The U.S. Securities and Exchange Commission has approved standards that could speed up spot crypto ETF approvals, as each application would not need to be assessed individually. It comes as spot ETF applications like Solana, XRP, Litecoin, and Dogecoin await official approval. This is a big shift. For years, the SEC has been criticized for dragging its feet on crypto ETFs, approving futures products while kicking the can down the road on spot ETFs. Now, instead of each application being treated as some brand new experiment, we're moving toward a standardized process. That's exactly what institutions have been waiting for, because it creates predictability, and predictability brings money. By approving these generic listing standards, we are ensuring that our capital markets remain the best place in the world to engage in the cutting-edge innovation of digital assets. This coming from the SEC Chair Paul Atkins. This move by the SEC signals a broader acceptance of digital assets as a legitimate part of the financial ecosystem. By lowering the barrier for new spot ETFs, this could open the floodgates for a wave of new investment products tied to a wider range of cryptocurrencies. However, critics argue that while the SEC's decision is a step toward mainstreaming crypto, it doesn't address deeper regulatory uncertainties. Questions around custody, market manipulation, and investor protections still loom large. Some worry that fast-tracking ETF approvals could lead to a flood of speculative products, potentially exposing retail investors to undue risk in a volatile market. The SEC will need to balance its push for innovation with robust oversight to prevent a repeat of past crypto market meltdowns. Looking ahead, the impact of this decision could extend beyond ETFs. A more predictable regulatory framework might encourage broader institutional participation in the crypto space, from banks offering custody service to asset managers launching new funds. It could also put pressure on other jurisdictions to clarify their own crypto regulations to remain competitive. For now, all eyes are on the SEC to how quickly it can turn these generic standards into tangible approvals, and which cryptocurrencies will be next. Next up, Ethereum's unstaking queue hits a new record high. Ethereum's exit queue just went parabolic. Last week, it surpassed 2.6 million Ethereum, worth around $12 billion, waiting to be withdrawn. That's the largest amount of Ether ever set for withdrawal by validators, who are the ones responsible for securing the blockchain by adding and verifying new blocks. Right now, the wait time to fully exit sits around 44 days. Now, before anyone starts panicking, on this channel I have talked about how investors are still bullish on Ethereum. They are withdrawing millions of dollars worth of coins from exchanges into long-term storage wallets. It is important to note that an exit queue does not automatically mean everyone is rushing to sell. Validators might be rotating their position, moving to new services, or just shuffling funds. But $12 billion is a huge number, and some portion of that will likely hit the market as people lock in profits, especially after Ethereum's nearly 97% rise over the last year. Meanwhile, the Ethereum staking entry queue has reached its lowest level in 4 weeks, adding to fears that a surge in the exit queue could lead to a major sell-off. More than 512,000 Ethereum, worth around $2.3 billion, were waiting to be staked at the time of writing, down from 959,000 Ethereum on September 5th, indicating a slowdown in demand for staking Ether. The parabolic rise of Ethereum's unstaking queue, paired with a shrinking staking entry queue, paints a complicated picture for Ethereum in the short term. Yes, $12 billion waiting to exit could create some selling pressure, but it's not necessarily a mass exodus. Validators may just be repositioning, and the steady flow of ETH into long-term storage wallets shows investors are still bullish at the core. So, while volatility is possible, Ethereum's fundamentals haven't changed. It's still the backbone of DeFi, it's still powering Layer 2 growth, and after a 97% rally over the past year, it's holding up remarkably well. And last for today, 2 coins under 10 cents that investors are betting big on. The tale of Shiba Inu stands out as one of the most fascinating stories in crypto history. Previously, Shiba Inu peaked at over 40 million% at one point, minting millionaires. Those early investors who had the luck or vision to get in back then saw a change in fortune in just a couple months. Now, traders are looking for the next token that could provide similar exponential growth, and 2 other projects consistently top the list, Little Pepe and Flare. That mind-blowing 40 million% growth of Shiba Inu wasn't just a fluke. It captured the magic and madness of meme coins catching fire in a bull run. Fast forward to today, and the hunt is on for the next underdog ready to explode. Little Pepe reached great heights this year and became the most awaited meme coin of 2025. Currently, it's pre-selling for 0.0022 cents, and it is in the 13th stage of its pre-sale, raising nearly $26 million. Little Pepe has also completed a Certicate audit, which makes Little Pepe a meme project with real infrastructure. Analysis projections are remarkably bold. Some models predict that Little Pepe could range between 6.5 cents and 10 cents within a year. What makes Little Pepe different is that it's aiming to go beyond the usual jokes and pump and dumps. The project is introducing what it calls Meme 2.0 economics, building a Layer 2 ecosystem dedicated to meme assets. The idea is to take meme coins out of pure speculation and give them a structured digital economy with room for apps, liquidity tools, and more sustainable hype cycles. While Little Pepe rides the wave of meme-driven hype and internet virality, Flare is carving out its niche by building robust infrastructure for blockchain interoperability. Flare is trading at just over 2 cents, which remains low cost while providing a tremendous and significant technical value to the blockchain ecosystem. Flare is an EVM-compatible Layer 1 with an embedded Oracle design, enabling secure on- and off-chain data access for smart contracts. Flare is building something a bit more foundational. Its core protocols, the state contractor and FTSO, let it securely verify events from other blockchains and bring in reliability. Off-chain data without relying entirely on centralized or third-party oracles. That means you could have a smart contract react to real-world or cross-chain events much more securely and trustlessly. Add to this the fact that Flare is EVM compatible. Developers can use tooling they already know, which speeds up adoption and reduces friction. And with its data protocols growing, including its FDC or Flare Data Connector, and increased query volumes, there's real momentum behind the infrastructure. This doesn't mean that Flare is risk-free. Nothing is. But these components suggest that it's playing the long game. If infrastructure and interoperability become more important in the next bull run, Flare is setting itself up for success. Well, that wraps up today's video. Let me know in the comments below, what do you think will shape the next bull run more? The meme hype cycle or the infrastructure plays like Flare? As always, thank you for watching, and I hope you have a truly fantastic day. I'll see you in the next one.